Hello everyone, welcome to my YouTube channel. This is just FS right here. I want to say a very big thank you to all those that have been subscribing to my YouTube channel and those that have been commenting, giving me feedback. I want to say thank you and I really do appreciate. Now in today's video, I'm going to be talking about how to apply the Dapo Willis strategy on the lower time frame, how you can use it to day trade. So guys, before we go right in, a quick disclaimer that whatever I'm going to be saying here is of my own opinion and it is not a financial advice. So guys, let's go right in. Now, understanding the concept around the Dapo Willis strategy that he normally teaches on the Forex Market or even on the on his YouTube videos, is the major thing he talks about is you being able to get the direction, your directional bias, with the overall flow of the market. You've been able to tell not just a particular candle, but the overall movement of the market. So you know if the market is majorly on a downtrend or majorly on an uptrend, or the market is clearly moving sideways. And basically, you only want to trade when the market is clearly trending either to the upside or to the downside. So once this is done, I think the entry rules is something very simple that you can just go down to the lower time frame and get the entry rules right. But the major thing there is if you can predict, if you can be able to tell if this market is moving up or is moving down, and I'm going to be going about that very shortly. Now, in using it to day trade, you normally trade the strategy on the higher time frame, like the daily and the 4 hours. The 4 hours, which is the entry time frame, and the daily time frame, which is the setup time frame. In coming down to the 15 minutes and the 30 minutes and the 1 hour, these time frame are going to be changed, and your bias time frame and also your bias time frame and also your setup time frame are going to be different. Now, in the normal way he trades, the bias time frame is majorly the weekly and the monthly, while the setup time frame is majorly the daily and also the weekly. And majority of the setup that you get on the daily also appear on the weekly. The entry time frame is the 4 hours time frame. But now, since you want to be using it to trade the 15 minutes, the 30 minutes and the 1 hour, what you're going to be doing is those bias time frame are going to be changed. Your bias time frame, you have to change your bias time frame. Now, and also one major thing is the key zone that you plot on the weekly time frame are still going to be there, so you know that the market has come to a major weekly zone. But also the major zones that you are going to be concentrating on are going to be the minor zone, which will now be acting as your major zone. And in plotting this minor zone, you're going to be plotting it on the daily, and your daily time frame will not be the time frame that you plot your major zone, and your 4 hours time frame is not the time frame you plot your minor zone. So guys, let's just go over the whole analysis first of all. Now, looking at this chart, we know that this market is clearly on a downtrend, very much on a downtrend, and that's the daily monthly time frame. Now on the weekly time frame, we can still see the same thing, that the market is clearly on a downtrend. Now let's take, for instance, let's take a particular region in the market. We're going to start our back testing because I didn't pay for this trade view, so I'll not be able to use the replay tool. So we're going to just set up this region where we just want to start back testing from. Let's just start from here. At least I believe we can get enough data from this zone. We'll go down to the weekly and the 1 hour time frame. So guys, now we can see that on the weekly time frame, this market is clearly on a downtrend. But basically, if you are trading on the 15 minutes, the 15 minutes, the 1 hour, and the 30 minutes, you want to pay attention mostly to the weekly candles, not just your overall trend of the weekly time frame, but also to the weekly candle, how the previous week printed and what you are expecting it to do, what kind of candle it is. That will give you an insight to what the present week that you are trading is going to be like. So guys, we're going to go down to the daily time frame where we're going to plot the major zone in quote. So guys, we're going to be starting from here. Let's just assume that this other side of this price chart has not been printed at that point. So in plotting our major zones on the daily, what we're simply going to do is we're going to use this rate to this horizontal tool, sorry, I'm going to use this as a horizontal tool, and I'm going to just plot it on the, in plotting your major zones. You want to take the obvious zones first of all. You want to take the obvious zones. Let me just make this one lap with this. Okay, I think it's better this way. Yeah. So we're going to be plotting the major zones. So I can see this. And also see. So I can see this. Sorry guys. I can see this. Okay, these are the major zones on the daily time frame. Now, the strategy in quote is one thing he always preach about. Now, one thing he always preach about is that market moves from zone to zone. You're also going to be applying that on the lower time frame too. Market move from zone to zone. But if you look carefully, you know that the market move from zone to zone, even on this daily time frame. So being able to plot your zone, I'm going to be dropping this video soon on how to plot your key zones, because people have been asking about how do I plot my key zone on some of the comment section. So guys, I'm going to be doing a video about that. So after plotting our major zones on the daily time frame, we'll go down to the 4 hours. So we're going to go down to the 4 hours, and the minor zone you're going to be plotting, it should be about what the market is currently doing. Now, we're going to be starting from here. Now we see that the market has come up to a major zone which was plotted on the daily time frame, and what we are expecting from a major zone is that it breaks it or it rejects from it and gives us a reversal in the market, where we'll be looking forward to change our bias. Now, this daily time frame and the 4 hours time frame are going to be your bias time frame, while the 5 minutes, the 15 minutes, the 30 minutes, the 1 hour is going to be your setup time frame. Whichever time frame you choose to use it on, it's going to be your setup time frame. Now, but personally to me, I would prefer the 30 minutes and the 1 hour. Now guys, in plotting the minor zone on the 4 hours, what I'm just simply going to do, I'm going to use this horizontal ray to mark my zone. This is an important zone, but I prefer this where the market came up to. Now, in understanding your bias, you know that as long as the market keeps making higher highs and higher lows, the market is on an uptrend. If it keeps making lower lows and lower highs, the market is on a downtrend. Now, you want to see a change of market structure on the 4 hours and on the daily before you can see that that particular bias that you have has been changed. Now, when the market came up to this major resistance, which was plotted on the daily, what we saw was the market that broke through it, then came back down to break this higher low that is higher than this low. The market then came down to make a lower low, which is lower than this low. Now we can see that the market has broke through a minor zone, which is also this last structural point. What we are on seeing this now, what your mind should be telling you is that I think there's going to be a change in market direction, directional bias of the market. Now guys, okay, this is a higher low, this is a higher high, this is a higher low, but on coming to this resistance, the market broke down, made a lower low, lower than the previous low, which is the higher low. Now on seeing this, you know that there's a kind of pattern which is generally the break and retest pattern, where you expect the market to, after making a high, come and break the low that made the high, comes back to retest it, and we're expecting to continue down. Oh, sorry guys. Now you understand that when a support is broken, it becomes a resistance. When a resistance is broken, it becomes a support. Now the reason I'm going at this length to explain this is so that you don't get mixed up in what your bias time frame is and what your setup time frame is. You only want to look for change in structure or change in bias on the 4 hours and also on the daily time frame. You don't want to be looking for change in structure on the 15 minutes, the 30 minutes, or the 1 hour. You don't want to be looking for structure. Then you're going to get false breakout and the rest. Okay, what you're going to be looking for is just set up on those time frame. Now, after breaking through this support here, the support becomes resistance. So the market came back to retest it, and we are expecting the market to continue down. Now, as at this point now, we're going to go down to the lower time frame and start seeing the opportunities that we have to trade in this direction now. Okay, going back to the 1 hour. Okay, coming down to the 1 hour time frame now, we can see that when the market broke through, market did a kind of a retest, a mini retest, a retest before it made some push down. Then come back to do a major retest, which is on the 4 hours before it also made a push down. I think it did under retest again before finally pushing down. But basically, what you're going to be paying attention, you don't really know if all this are going to happen. Now, on seeing this, you trading on the 1 hour time frame, on seeing this breakdown and also coming back to come and retest, your mind is going to be definitely you want to take the trade, and it's pretty much a very good retest. Now, the pattern which you can use to take this trade on seeing this is you can simply put up your counter trade line to take it. Now, in getting confirmation for the setup, now this is a very nice setup. In getting confirmation for the setup, what you do also is you put out your Fibonacci retracement. You want to see it come down to the 50 and all the 61, all the 78 retracement zone, and also let that zone aligns also with support and with resistance. Then after the market rejecting from that zone, let the market reject from that zone, and that's where you want to take your entry from. That's when you want to take your entry from. Then you now apply your, it's a lower time frame, so you know that the lower time frame are not like the higher time frame where you get those large pips. So whatever you're able to get any point in time, you should be able to break even or secure it. Like going for a 1 to 3, if you can get 1 to 1, you can go and break even on 1 to 1, thereby saving yourself the stress of drawdown, market coming back to your drawdown before going back in profit, or you getting the profit first before the market not coming back to later hit your stop loss when it does not make a 1 to 1 or hit the 100% retracement zone. On this, the market has already done the 100% retracement. You can simply just close out. If you are risking more than 1%, or if you are comfortable, you can close out 0.5% and let the other percent run. On trading on the lower time frame, I don't risk more than 1% of my account. I don't risk more than 1% of my account. So guys, this is a mini example. Now this is the first example. On this retest, you know that this market is more likely to continue down. Now going to the 15 minutes time frame, I hope we get the data up to that time. Okay, no, 30 minutes. Okay, 30 minutes. We're able to get the data up to this time. Now, 30 minutes, what you see, the setup is more clearer on the 30 minutes time frame, and the break and retest is also much clearer. So guys, you would have been able to get a 1 to almost 1 to 2 before the market came back to your break even to come and take you out at break even. Also for a major retest, came back for a break even. So guys, that's one. So on doing this, you don't want to buy. You are not changing buyer. You see the market breaking a structure here. This is what you don't want to be doing. You know that the market is now pointed down, and the only thing you want to be doing is that you want to be selling. You don't want to be doing this and start saying, okay, this market has broken a structure on the 30 minutes time frame. Okay, it's time to buy to this zone. There are people that do that, but to be more disciplined, all you just want to do is to wait and get that sell setup. Only that sell setup. Then you become more disciplined and you can account for your trade, and you can also document your trade down. This is what you don't want to be doing. So this setup now is not a 30-minute setup because the market has already invalidated the 30-minute structure. Market has broken above it. This is the structure that made this low. The lower high that made this low, and made this lower low. Now market breaking it. What you want to see the market change again on the 30 minutes time frame. You want to see the market align, the 30-minute structure start aligning back to the daily and the 4-hour structure, which it did here. Did a mini structure up. This a higher low and a higher high, broke it, came back to retest it, and you see the market continued down. Even this structure that the market did here, This is how I trade, guys. I don't just leave everything to chance. This structure that the market did here is enough for me not to take the trade when the market comes here. But you see what the market did here. You see what the market did here. This will let you know that the same thing that the market did on the 4 hours time frame when it broke the higher low. When it broke the higher low, came back and retest it. That's what the market did here. This is a market that is coming down after breaking below this higher low. Market came back, did a retest, not a perfect retest, but wanted to continue down. Made a higher than this current high that is here. What we are now seeing is a market that came back down to the lower low that market made before. Most likely, if the market did not reject from here and break below this lower low, what we expect the market to do is to continue down. And eventually, the market did that, did a Marabuzo, a very strong candle, broke below the lower low, the overall support, and see it come back to retest to continue down. On the 15 minutes, you'd have been able to catch this sell here. My own personal advice in trading is that you don't leave anything to chance. You don't take a trade that is, you see a market that is on a strong bullish movement, you start selling it, expecting it to make a return, and when you know that there are still some obstacles for it to break, you just wait for it to take out those obstacles, then you get your entries. As long as you know what your entry is, you get your entries, then you place your trade. Now let's go to the 1 hour time frame to see how we could have entered that trade. So guys, see the market came back for a major reset. Getting to this support now turn resistance, you don't start selling immediately. What you do is you wait for the confirmation before you sell, and the major confirmation that he has always been teaching about is a break of the counter trend line. You wait for the break of the counter trend line, you take your trade. Put your stop at the overall high. This is just 43 pips stop, and at the 100% retracement, this is already 1-to-1. You'd have gone break even here, or you'd have even closed out half of the position, then go and break even and just let the rest run. Now, mind you, we are currently on a downtrend. We don't want to be buying, guys. So we're only looking for selling opportunity. So anything concerning buy right now, we are not really involved. So we are just looking for a setup on the lower time frame or our preferred time frame to be able to sell this market. So the same principle just still applied. You're going to set up your, if a market does a straight up movement like this and you are not able to get the point where you can put up your counter trade line, you just need to go down to a little lower time frame to get the actual move, to get a more detailed move of how the market went up or went down. You could have drawn your counter trend line like this, or preferably you could have drawn it like this. I do the two, guys. If drawing it like the market breaks through, I'm not yet convinced, I will put up this and this second one and just wait for the market to clear both out. I know that there's nothing to as regarding my knowledge that is holding this market now. So all my criteria for a sale is ready and I can just enter the trade. So guys, this also. So you enter the trade here, your stop at above market structure, and you go for your 1 to 3. At 1-to-1, you can just decide to just break even 1-to-1, let the rest run, guys. In terms of money management, you should be smart about it, but it's nice, so let's take something out of the market. So you go and break even and just let it run. So guys, we're going to go to the 1 hour time frame and try and get some setup. Okay, now we see that the market kept coming down, and we see the market that did lower low came back to break the lower high, came back to break this resistance that is here, and you see the market come back to retest it and continue up. This is what you don't want to be doing, guys. You don't want to be buying on a downtrend simply because this market broke this structure on the 1 hour time frame. Does not mean that the buyers have changed. The buyers have not changed, but if you understand that you can cope with it, you can go ahead. But I prefer you just stay put and let the market correct itself to your overall buyers. If not, when it changes bias on your bias time frame, you can decide to start trading on the opposite way. Now on this market, what you can do is to just wait and let the market put up some structural point where you can set up your counter trade line. Now once the market breaks above this resistance here, putting up a higher high and start moving up, making higher highs and higher lows on the 1 hour time frame, all you just need to do is to be patient. And once you put up your counter trade line, you also mark out your kick zone. You also mark up your keys on your 1 hour time frame, which is your setup time frame, and also which can also be your entry time frame. Since on the lower time frame, you can simply be your setup time frame and your entry time frame, and you can still get a good stop loss. So guys, on breaking this support, this is the last lower high that made this higher high. For the market coming to do a double top and breaking below the neck of the double top, and also the counter trade line, and we see a market that fell down. You can go for your 1 to 3 and you're done. Or you can start doing it from zone. If you are that patient, you can start doing it from zone to zone. But the market, I prefer for you to just go for a particular target, because on the lower time frame, the market can play a lot of drama. As you can see here, it did the very first retest. You're setting your targets to this key level here. What you would have gotten was a break even, which would have been this, and finally the fourth trade would have been the trade that gave you your profit. But to avoid that, you could have taken 1 to 3 here, taking 1 to 3 here, would have been 6%, and take something out of this other break even, you would have been up some significant percentage. So guys, as simple as that. The major thing you just want to pay attention to is you want to pay attention to the overall bias of the market and be disciplined enough to stick to that bias until you are convinced that that bias has been changed. So guys, you can just get enough entries from this. Enough. If you trade on the 15 minutes time frame, all these pullback, smaller pullbacks are very clear on the 15 minutes time frame, while all these major pullbacks are more clearer on the 1 hour time frame. So if you understand this time frame and understand how to apply them, you will not really have issues with trading with this strategy. But when you want to buy and sell, when you want to buy on a downtrend, or you want to start selling on an uptrend, that's where you start having issues with this strategy. But if you can go with the overall flow of the market, I don't think you will have issues like that. You will definitely have loss. There's no strategy that's 100%, but your loss will be minimal. Dapo Willis can boast of 100% because he does not take many trades. Within a year, he can take only 10 trades or 15 trades, but those trades are enough to make him more than what he is looking for. He is a master of it, of his own strategy. So guys, the major thing is that if you can go back and practice more and try and discipline yourself to stick to your bias and also not overtrade or setting up many pairs, you can just go with, since you are day trading, I advise highest 3 pairs, and take only the best setup, the most obvious setup. You don't have to be taking all of this setup. You can just choose to take just the most obvious ones in it. Now, okay, let me explain something here. Now there's a change of structure here, but for you to confirm that there's a change of structure, you have to go down to the daily time frame and also your 4 hours time frame to get the overall structure of the market. Now the bias of the market only changed when the market came to break the 4 hours resistance. I will say this is the 4 hours resistance. Market made lower high, made the lower low, made the lower high, made the lower low, and came back to break that lower high. On breaking it, then you know that the market has changed bias. It's about to change bias, or has changed bias. So the same knowledge you applied here is also the same knowledge you're going to come and start applying here. You start trading in the new direction. Okay, to get another confirmation, you can decide to wait for a new higher high. On coming back for the retest, then you can decide to start trading in that direction of the market. But moreover, you should also know what leg you are trading on the daily time frame. That's the last thing I'm going to talk about. Now, on trading the impulse leg on the daily time frame, you're going to get more clearer setup. But trading the retracement leg on the daily time frame, you're going to get setup that are not that clear. I'm going to explain what I mean by impulsive leg and retracement leg. Now, overall, we can see that this market is on a downtrend. Now, and a retracement leg on the daily time frame is a major trend on the 1 hour time frame. I'll take that again. A retracement leg on the daily time frame is a major trend on the 1 hour time frame. So an impulsive leg also on the daily time frame is a major trend on the 1 hour time frame. Now, what I mean by retracement leg, this is a retracement leg. This is a retracement leg. This is an impulsive leg. This is an impulsive leg. Simply because the impulsive leg is the price action in direction of the overall trend, while the retracement leg is the one that the pulls back. While the pullback is simply the price movement against the overall trend of the market. I hope you guys got that. The pullback is simply the price movement against the overall trend of the market, while the impulsive leg is the price movement in the direction of the market. This is the price movement against the overall trend of the market. This is the price movement against the overall trend of the market. Why this is the price movement in the direction of the overall trend of the market. Why this is the price movement in the direction of the overall trend of the market, which you can see clearly on the weekly time frame. So if the market is on an impulsive leg daily time frame, you will get more clearer setups on the 1 hour, on the 2 hours, on the 30 minutes time frame. But if the market is on the retracement leg on the weekly time frame, you're going to get setup, but they will not be that clear. That's where setting a fixed target comes, and you using your break-even, because it's on the retracement leg mostly that you get more break-evens than on the impulsive leg. Impulsive leg, you can just take the trade and you can use your 40 pips, your 30 pips, your 50 pips to catch over 500 pips, because when the market moves from that your 1 hour setup, most times it does not come back to that zone again. So guys, I hope you guys understand that illustration that I gave. Now also, the major thing you also want to be using is the Fibonacci. But mostly, if you can plot your support and your resistance, mostly the Fibonacci always align 5061 always align with a support and or a resistance zone, which is also the 78. They always align with a support and resistance zone. But the combination is that you don't only take the Fibonacci. I would prefer you take only a support, a market that pulls back to a support even without reaching the 50 or the 61, than you taking the 61 and the 50 retracement zone that did not get up to the support, or that there's no major support there. Support or resistance, guys. You understand what I mean? So guys, that's it on it. If you still have any questions, you can ask me on the comment box, and I hope you find this video very helpful. Please be sure to subscribe if you are new to the channel, so you help the channel go, and leave me a like so that other people can also find the my content. So guys, this is it on this video. If you are not very clear, you can indicate so I can create a part 2 of this video, probably with more example, and hit that subscribe button and help my channel grow. So thank you very much for watching, and see you in the next video.